Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about RLI CORP quarterly report. RLI Corp, a leading insurance holding company, provides a wide range of insurance services to various businesses and individuals. The company's offerings include property insurance, commercial property insurance, office buildings, apartments, condominiums, industrial and mercantile structures, cargo, hull protection and indemnity, marine liability, inland marine, homeowners and dwelling fire casualty insurance, commercial excess, personal umbrella, general liability, transportation, management liability, professional liability, workers' compensation, commercial automobile liability and physical damage insurance surety bonds, commercial surety bonds for medium and large-sized businesses, small bonds for businesses and individuals, and bonds for small to medium-sized contractors reinsurance, coverages specialty insurance products, plus directors and officers liability insurance, plus fiduciary liability and coverages, plus employment practice liability, plus public and private business risk, plus home business insurance, plus environmental liability for underground storage tanks, contractors and asbestos, and environmental remediation specialists plus errors and omission coverage for small to medium-sized design, technical, computer, and miscellaneous professionals. RLI Corp markets its products through various channels, including branch offices, wholesale and retail brokers, carrier partners, and underwriting and independent agents. RLI Corp's stock price drop. A year of challenges in the past year, RLI Corp's stock price has plummeted by over 19% due to a combination of factors. The company's mixed second quarter financial results, where revenue fell short of forecasts despite beating earnings expectations, led to a negative market reaction. Analyst downgrades and price target adjustments from Jefferies and Compass Point further contributed to the decline. Concerns about growth in RLI's casualty segment, exposure to a softening property market, and increased competition in the excess and surplus (E&S) property market have also weighed on the stock. The company's net earnings declined in the first quarter of 2025 due to an unrealized loss on equity securities, while underperforming property products within its business were discontinued. Broader market pressures have also taken a toll on RLI Corp's stock, with it trading below its 50-day moving average and described as having a challenging year. Despite reporting strong third-quarter earnings, the company's stock price has not yet recovered from these negative factors. The primary drivers of revenue growth or decline in the company's financial performance can be attributed to several key factors. The most significant contributors to revenue growth include a substantial increase in net premiums earned, rising by 238%, as well as notable increases in consolidated revenue and revenue from fixed income securities. Additionally, the casualty segment experienced a notable growth rate of 26.4%, and the property segment saw an increase of 34.3%. These factors collectively contributed to a significant overall revenue growth of 331%. In contrast, the primary drivers of expense growth or decline were more varied. While policy acquisition costs increased by 8%, insurance operating expenses decreased by 7%, and interest expense on debt rose by 10%. Net income and profit margins experienced significant changes between Q3 2024 and Q3 2025. Net income increased by 49.6% to $32,635, while net income margin improved from 8.2% to 10.6%. This growth was driven by higher underwriting income, investment income, realized gains, and unrealized gains on equity securities. However, the combined ratio worsened from 83.3% to 84%, indicating a slight increase in losses. The expense ratio also increased from 37.8% to 38.5%. Despite these negative trends, the overall net income margin remained relatively stable when comparing YTD 2024 and YTD 2025. The minimal catastrophe losses in Q3 2025, compared to $37 billion of pre-tax losses from Hurricanes Beryl and Helene in Q3 2024, contributed significantly to the improved results. The increase in underwriting income, investment income, realized gains, and unrealized gains on equity securities also played a crucial role in the improved net income and profit margins. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash flow of $457,453,000 in 2025, it is clear that the business is producing sufficient funds to cover its expenses and invest in growth initiatives. This positive trend suggests a healthy and sustainable financial position for the company. The company's financial performance varied across different segments and regions. Notably, the casualty segment saw significant growth in its commercial excess and personal umbrella lines, increasing by 26.4%. The property segment also performed well, with a 34.9% increase in other property. However, some segments struggled. In the casualty segment, small commercial and executive products declined by 4.8% and 3.1%, respectively, while other casualty fell by 13.5%. The property segment's commercial property also saw a decline of 14.6%. Additionally, the surety segment's contract line decreased by 1.5%. These results indicate that certain lines within specific segments are performing better than others, highlighting areas for improvement and potential opportunities for growth. Management is emphasizing a dual focus on underwriting profitability and premium growth. They are investing in people and technology, which has led to increased expenses, but is driving growth in premiums, particularly in the casualty segment. The company's strategy aims to preserve capital for policyholders, generate sufficient income to support operations, and grow book value over time. Management is also prioritizing improvements in operating earnings, combined ratio, and return on capital to drive executive compensation. Overall, the outlook is positive, with improved underwriting results across all segments and sufficient liquidity to meet anticipated needs over the next 12-24 months. The company has a history of paying dividends to its shareholders. This is confirmed by the financial summary, which states that the company has indeed paid dividends. Specifically, it is noted that the company paid $0.16 per share in dividends on September 19, 2025. That concludes the financial summary for RLI CORP. Feel free to comment below, and I will be happy to answer them when possible.